The global economy just hit a wall of steel and fire. On Monday morning, Brent crude didn't just rise, it surged 13% to $82 per barrel in a single opening session. That is a $9.30 jump from Friday's close, the kind of vertical move we haven't seen since the 1970s. WTI crude is screaming past 75, and gold, the ultimate barometer of fear, is reaching record highs as investors flee the burning wreckage of market certainty. But the real headline isn't the price, it's the Strait of Hormuz. The 21-mile corridor that carries 20% of the world's daily oil has effectively closed. Insurance companies have withdrawn coverage, and tanker operators have suspended operations. This isn't a drill, and it isn't an external tragedy. This is the direct economic fallout of an American war of choice. Economists have been warning about this specific black swan event for months, and now the mechanics are in motion. We are entering a cycle of stagflation, soaring energy costs cascading into broader inflation, while economic growth flatlines and unemployment rises. Midterm elections are only 10 months away, and the promises of cheap gas and $50 oil have evaporated, replaced by the reality of a global energy chokehold. I'm Camilo Motato, reporting for Thu News. As a certified public accountant, my job is to analyze operating margins and fiscal solvency. In any business, when your primary input cost, energy, doubles overnight while your customers' purchasing power collapses, you are looking at a going concern crisis. Today, we are auditing the cost of this war. We are looking past the cost of freedom rhetoric to the hard data, the GDP drag, the inflation spikes, and the impossible corner the Federal Reserve has been backed into. Let's look at the macro ledger. Barclays and UBS analysts are already telling their clients to prepare for the worst. The math is brutal. Every $10 increase in the price of a barrel of crude oil subtracts approximately 0.4% from global GDP, while adding 0.4% to headline inflation. If oil reaches $130 per barrel, a scenario that is becoming more likely every hour, we are talking about a 2.4% inflation hit and a similar drag on growth. For an American economy that was already showing a 42% recession probability before the first bomb dropped, this is the point of no return. Trump promised $50 oil. He is delivering 100 plus oil. In accounting terms, this is a material misstatement of his entire economic mandate. This is the part that should terrify every investor. The Federal Reserve is now officially trapped in a policy paralysis. Option A, they raise interest rates to fight the oil-driven inflation, but doing so crushes the already weakening labor market and deepens the recession. Option B, they cut rates to support growth, but that pours gasoline on the inflation fire, debasing the US dollar even further. As a CPA, I see this as an audit impasse. There is no entry you can make to balance this ledger. Inflation is strengthening and growth is stalling. This is the definition of stagflation. Economist Peter Schiff hit the nail on the head. This will be sold to the public as the cost of freedom, even though Pentagon briefers told Congress there was no intelligence that Iran planned to attack first. This wasn't a defensive necessity. It was an elective war that is now destroying the American balance sheet. Let's audit the physical disruption. Analysts from Kepler are reporting that while the strait is technically open, it is de facto closed. When insurance premiums hit 6-year highs, transit becomes economically unviable. If you can't insure the cargo, you don't sail the ship. 3 vessels have already been struck by projectiles in just 72 hours. GPS signals are being degraded across the region, making navigation a gamble. More than 14 million barrels per day, a third of the world's seaborne crude, are now inert inventory. 3/4 of that oil was destined for China, India, and Japan. While the US sources only about 7% of its oil from Hormuz, the global price convergence means American families will pay the same war premium at the pump as everyone else. We are looking at $5 gas by the summer, and that is a political liability that no amount of jingoism can hide. As we audit the global reaction, we see a massive capital flight away from the US dollar and into hard assets. Gold and silver are hitting record highs, and as a CPA, I recognize this as a hedging maneuver against currency debasement. When the world's reserve currency is tied to a nation launching unpredictable wars of choice, the risk-free rate of the US Treasury no longer feels risk-free. The US dollar is weakening, which creates a cost-push inflation nightmare. Since oil is priced in dollars, a weaker dollar means we need more of them to buy the same barrel. This is a double whammy for the American consumer. The price of oil goes up because of the war, and the price of oil goes up again because our currency is losing value. This is a positive feedback loop of economic destruction. Investors aren't just hedging inflation, they are hedging against a total loss of American strategic stability. Perhaps the most damaging data point in our audit today isn't a price chart, but a diplomatic one. Denmark, a founding NATO member, just listed the United States alongside Russia and China as a potential election interference threat. Think about the impairment of goodwill here. European allies are observing Washington launching a war based on fabricated intelligence claims, triggering global economic chaos, and they are reassessing their entire dependency on American leadership. While European economies have spent the last few years diversifying their energy supplies, the US is doing the opposite. The German Marshall Fund notes that while higher oil prices hit everyone, Europe's infrastructure is now better distributed to handle the shock than the US's. We are witnessing the de-Americanization of global strategy in real time. Can the rest of the world pump their way out of this? Trump is banking on OPEC Plus to increase production. But let's look at the inventory ledger. OPEC Plus announced a 206,000 barrel per day increase starting in April. As a professional, I call this a drop in the bucket. If the Strait of Hormuz remains closed, the world loses between 8 and 10 million barrels per day. No amount of spare capacity from Saudi Arabia or the UAE can offset that loss. The logistics simply don't exist. The pipelines are full, and the alternative routes can't handle the volume. We are facing a physical supply deficit that no executive order can fix. Trump promised $50 oil, but he has created a world where $130 oil is the new floor. Finally, we have to look at the political liability. Republican strategist Rob Godfrey noted that Trump's base is skeptical of foreign entanglements. Trump ran on ending forever wars and bringing down inflation. Now he is prosecuting a regime change war in a country 4 times the size of Iraq with twice the population. Every $1 rise in crude oil increases the annual import bill by billions. This isn't just about gas prices. It ripples through agriculture, manufacturing, and transportation. By the time the midterm elections arrive in 10 months, the Trump prosperity will be a memory, replaced by the Trump tax on everything from groceries to rent. He is delivering the exact economic crisis he promised to prevent. And as an auditor, I can tell you, the voters are going to demand a full reconciliation of these broken promises. The final audit of the 2026 oil shock shows a nation imploding economically by its own hand. We have $130 oil, a weak dollar, record inflation, and a Federal Reserve that is effectively insolvent in its policy options. This is a replay of the 1970s OPEC crisis, but worse because it was entirely avoidable. The Pentagon admits this war wasn't necessary for defense. It was a war of choice that has now become an economy of ruin. As a CPA, I see the going concern of the American dream being threatened by strategic recklessness. But I want to hear from you. Are you already seeing the war premium at your local gas station? Do you believe the US can finance both a multi-front war and a growing domestic deficit? Let me know in the comments below. Your perspective is the only audit that matters when the official narrative falls apart. I'm Camilo Motato, Certified Public Accountant for Thu News. Thank you for joining me for this 10-minute deep dive into the numbers behind the chaos. Subscribe, stay informed, and stay safe.